Investing is a way to set aside money while you are busy with life and have that money work for you so that you can fully reap the rewards of your labor in the future. Simply put, stocks are a way to build wealth. They are an investment that means you own a share in the company that issued the stock. When you're ready to buy stocks or mutual funds, you'll usually buy them online through the stock market, which anyone can access with a brokerage account, robo-advisor, or employee retirement plan. Definition: what is the stock market? The term stock market often refers to one of the major stock market indexes, such as the Dow Jones Industrial Average or the S&P 500. Because it's hard to track every single stock, these indexes include a section of the stock market and their performance is viewed as representative of the entire market. What is a stock? Stocks, also known as equities or publicly traded companies, represent ownership interests in businesses that choose to have their shares available to public investors. A share of stock represents an ownership interest in a company. If you buy a share of Apple, you own a small part of the business and get to share in the company's success. Why does a company issue stock? Companies sell shares in their business to raise money. They then use that money for various initiatives. A company might use money raised from a stock offering to fund new products or product lines, to invest in growth, to expand their operations, or to pay off debt. Companies typically begin to issue shares in their stock through a process called an initial public offering, or IPO. Once a company's stock is on the market, it can be bought and sold among investors. If you decide to buy a stock, you'll often buy it not from the company itself, but from another investor who wants to sell the stock. Operating much like an auction house, the stock market enables buyers and sellers to negotiate prices and make trades. How are prices determined on a stock market? Stock prices on exchanges are governed by supply and demand, plain and simple. At any given time, there's a maximum price someone is willing to pay for a certain stock and a minimum price someone else is willing to sell shares of the stock for. Think of stock market trading like an auction, with some investors bidding for the stocks that other investors are willing to sell. What does it mean when you own stocks? Most investors own what's called common stock. Common stock comes with voting rights, and may pay investors dividends. There are other kinds of stocks, including preferred stocks, which work a bit differently. What you own, essentially, is a share in the company's profits, and, it should be said, its losses. The goal, of course, is for the value of the company, and as a result, the value of its stock, to go up while you're a shareholder. Investors must carry out the transactions of buying or selling stocks through a broker, which is simply an entity licensed to trade stocks on a stock exchange. A broker may be an actual person whom you tell what to buy and sell, or, more commonly, this can be an online broker, say, TD Ameritrade or Fidelity, that processes the entire transaction electronically. If you have a 401k through your workplace, you may already be invested in the stock market. Mutual funds, which are often composed of stocks from many different companies, are common in 401ks. Stock investing, when done well, is among the most effective ways to build long-term wealth. If you have any further questions, then make sure you leave a comment below. If you'd like more daily finance content, then make sure you hit that subscribe button to join our community of aspiring entrepreneurs and investors.